My name's Collin Hart. I'm the CEO and Managing Director of ERE Healthcare Real Estate. I'm here at the Revista Medical Real Estate Investment Forum in Pasadena, California, and I'm going to be interviewing a variety of leaders and participants in the medical real estate world to get some insight on the future of healthcare real estate. Can you identify one specific trend that sticks out to you as it relates to medical real estate?
Yeah, I think when you look at medical office real estate relative to other asset classes, we've been known as that steady eddy of all the real estate asset classes, right? You know, we're not going to wow you with year-over-year rent growth, but we are going to be steady. We have great fundamentals across the board with above 90% occupancy across the nation. And, you know, when you look at the credit profile, even with health systems in distress, we've got good tenancy inside of the building.
There's a lot of physician groups that are getting acquired by private equity coming into the space. I think it's been challenging to evaluate the credit of those different tenants, and they tend to lever up those physician groups pretty substantially, and it makes it harder for them to cover their rent payments and function as an organization. So I think that might be a challenge going forward to evaluate whether or not tenants are going to be able to pay their rent. And will be something to consider going forward.
Occupancy increasing over the last year with construction pricing increasing. You've seen a lack of supply. Most of the supply is single tenant, health system driven, just because they can afford a higher rent. So I think we're in a good position. Landlords are in a good position to push rents because their tenants can't really leave.
I think the trends for me that sticks out the most is probably the emergence of alternative types of investments, namely assets like IRFs, behavioral health hospitals that are really starting to kind of move to the forefront. They've kind of historically been more in the background, and I think we're going to see more of that due to both underlying demand drivers as well as, frankly, the yield being there.
How do you perceive consolidation in healthcare to affect the healthcare real estate market?
The consolidation in healthcare and how it's impacting the market is really interesting in that a lot of these private equity companies and health systems are acquiring all of these smaller practices, which helps them for reimbursement purposes. However, it really makes it harder for younger physicians to break into the private sector.
So I think as a buyer, it's good and it's bad. I think that with this consolidation, you're seeing additional cap rate compression, whereas you were buying smaller mom-pop shop tenants and you were able to extract the value from the real estate point of view and buying them at higher cap rates. With this consolidation and these larger groups coming in, that cap rate compression, is obviously seen. I think what's important with regards to that is your valuations obviously go higher. So when it comes to obviously us looking to sell, we're in a much better position.
Are regulatory or policy changes affecting the thesis for investing in medical real estate?
I would have to say the answer is there's no. I don't think there's regulatory or policy wise. I mean, the overall is we need healthcare. If there's micro on the policies, the concerns is, are we keeping enough up with the reimbursement rates required to keep doctors and practices economically feasible? And it's always painful for them. We hear it from the doctors, hey, we're getting cut by the amount of reimbursement, but they figure a way out and push back enough that because we need healthcare, it eventually gets addressed. So I don't think there's anything on that realm greatly changing it.
It affects certain aspects of medical real estate. There's a subsection of our industry that is very operator focused. Really, any JV deal that you're getting as far as tenancy is going to be operator focused. And the more operator focused your investment is, the more susceptible you'd be to regulatory risk.
Can you identify one specific opportunity or challenge in the market for medical real estate?
I think there's an opportunity really to buy deals with shorter lease term, but also below market rents, because we have seen rent growth, right? Historically, medical, the rent growth has been So-so. It's been okay, but we've actually seen it recently tick up with inflation and the high cost of new construction. So we're actively pursuing opportunities where there's a mark-to-market story. So I think that's an example of an opportunity.
The biggest challenge, obviously, I think everyone's probably said this right now, is interest rates. Obviously, we need interest rates to come down a little bit just to have a little bit more movement and fluidity in the market. That's the biggest one. So I'm going to just choose that as my only one.
One challenge that I see is, again, reimbursements, because that is a very large trend. It's been difficult for a lot of these smaller practices because there's no collective reimbursement bargaining. So if you're a much smaller group, your reimbursements are going to be a lot smaller versus these larger groups are able to negotiate slightly more.
How will this year's presidential election affect the market for medical real estate?
I don't think whether it's a Democrat or Republican that gets elected, one way or the other is going to have too significant of an impact. I think what we want to see is the election to be done with, right? Then the Fed's free to do what they need to do to regulate the interest rate environment. Right now, election year, they're probably sitting on their hands a little bit more than all of us would like them to.
I don't think there's anything with the election impacting the quality of healthcare long term. Healthcare is there. It's it's a growing asset. There's going to be a focus on there. Anybody needs to have that. So despite who wins, that trend is going to continue.